Hi, Mr. Wang here, the co-founder of ANC Group. So as you know, recently the government just announced Budget 2022. So what's in store for us? Now we have summarized everything in this video for you, so let's get on to it.
Budget 2022 proposals were formulated to rebuild the nation's economy and to move beyond COVID-19 pandemic. With the focus to speed up recovery, strengthen economic resilience and catalyze reform, these tax proposals include measures to spur investments and recover government tax revenues. Billions have been disbursed to the businesses and the people. Perhaps it's the right time to recover some. This video intended to give you a comprehensive update on the tax measures introduced in Budget 2022, update on Employment Bill 2021 and employer-related obligations. So, let's roll. Let's talk about employers. For the past 2 years, billions have been disbursed by SOCSO, and now it is time to do some recollection. Effective 1st January 2022, salary ceiling for SOCSO will be increased from the original 4,000 to 5,000. This will result in higher contribution for both employer and employee. Although Budget 2022 did not specifically mention anything about Employment Insurance System, EIS in short, we believe the same ceiling will apply to EIS. Number 2, statutory EPF contribution rate of 11% by employee has been reduced to 9% to ease the cash flow of the employee or individuals. The initiative, which was supposed to end on 31st December 2021, will be extended to June 2022. Number 3, dreaming about continuation of wage subsidy program? Like I do, but sadly, wage subsidy program will only be applicable to tourism sector for 2022. Application details have not been released by SOCSO, but do not worry, we will keep you posted in our Facebook page or text letters. Employment Bill 2021. A revamped Employment Act has been in discussion for years, and now the government has shed some light in terms of the proposed amendments. Number 1, it was proposed that the working hours per week will be reduced from 48 hours to 45 hours. Number 2, maternity leave of 60 days will be increased to 90 days. Number 3, a paternity leave of 3 days will be introduced. Do take note that the husband or father can only claim up to a maximum of 5 confinements. To be fair to employer, it is only applicable for employees who have worked with the employer for more than 12 consecutive months, and you have to apply 30 days in advance. Number 4, employee can apply for a flexible work arrangement to vary hours of work, days of work, or place of work. Employer must revert the employee within 60 days from such application. If refused, employer needs to state the reasons of such refusal. Number 5, it has been a huge challenge to the court and the employers due to absence of a written contract of service, in short, employment contract. In this respect, a new section will be introduced. If the employee's work is subject to control and direction of the employer, employee is provided with tools, materials or equipment to execute work performed for the benefit of the employer, and payment was made to him, which constitutes majority of his income, such circumstances will still be presumed as an employment relationship. Number 6, a notice to raise awareness on sexual harassment must be in place at the workplace. Number 7, a new section to prevent employer from threatening, deceiving, or forcing an employee to do any activity, service, or work, and stop them from leaving the workplace. Let's talk about individual tax. Number 1, in view of the fact that salary ceiling for SOCSO has increased to 5,000, the tax relief for SOCSO contribution will also be increased from 250 to 350. Number 2, oh yes, we have been talking about EIS for years. The SOCSO tax relief now covers EIS. Number 3, Last year, the government announced a new tax relief for upskilling and self-enhancement of 1,000 ringgit. This tax relief will be increased to 2,000 for year of assessment 2022 and 2023. Courses here referred to courses in any field recognized by the authority. This 2,000 will form part of the education relief of 7,000. Number 4. EPF relief of 4,000 is expanded to include voluntary contributions, which include pensionable civil servants. Number 5. Every family would spend hundreds or even thousands on COVID-19 detection tests or self-detection kits. The government understands and therefore expanded the scope of medical examination to include such expenses. This is with effect from year of assessment 2021. But my dear, can't you include face mask? Number 6. During the movement control order periods, many businesses and individuals were unable to operate or work. This has caused very serious social problems and mental stress. Therefore, mental health examination or consultation by a psychiatrist, clinical psychologist or registered counselor is now claimable under the same medical examination. This is with effect from year of assessment 2022. Number 7. Tax relief of 3,000 for fees paid to childcare centres registered with the Social Welfare Department or kindergarten registered with the Ministry of Education will be extended from year of assessment 2021 to 2023. Number 8. As part of the government initiative to revive tourism, tax relief of 1,000 for domestic tourism will be extended to 31st December 2022. The scope of expenses claimable are accommodation expenses registered with Ministry of Tourism, Arts and Culture, an entrance fee to a tourist attraction, and in Budget 2022, the scope has been extended to include domestic tour packages booked through licensed travel agent registered with the ministry. Number 9. 2,005 ringgit special tax relief for personal computers, smartphones or tablet is to be extended until 31st December 2022. If you plan to change your iPhone next year, iPhone 14 for sure can be claimable. Number 10. Tax relief of 3,000 on deferred annuity and contribution to private retirement scheme will be extended for another 4 years until year of assessment 2025. 11. Under Budget 2021, the government has announced a special tax treatment for individuals at a flat rate of 15% for a period of 5 consecutive years. This is only for non-citizen individuals holding key position, also called C-suite, and this special tax treatment will only apply for companies who make strategic investments for relocating their operations to Malaysia. The investment or capital expenditure amount here refers to 300 million and above. The tax treatment will be extended for another year until 31st December 2022. Number 12. Owners of buildings, including individuals, who offers a rental deduction of at least 30% from the original rental rate to its tenant who uses it for business purposes will be entitled to a special tax deduction equivalent to the amount of rental deduction. This incentive will be extended until June 2022. The above are generally the existing reliefs with extension and expansion of scope. Let's talk about something new in 2022. In 2019, the government announced that they were working on a tax identification number. This year, this TIN, tax identification number, comes to light. Point number 13, with effect from 1st January 2022, any person who is accessible and chargeable to tax, or required under the law to furnish return, or any person who is a citizen and age 18 and above will automatically assign to a TIN, a tax number. 14. Foreign source income. Yes, you heard me right, foreign source income will be taxable in Malaysia. It is proposed that paragraph 28 Schedule 6 of the Income Tax Act will be amended to impose income tax on residents in Malaysia. Now, how does the mechanism work? Are we paying taxes in both countries? The answer is yes and no. For instance, if you are a resident in Malaysia and you have foreign source income from Singapore, which is taxable in Singapore, so let's say in Malaysia the effective tax rate is 20%, while Singapore the effective tax rate paid is 15%. This 15% can be claimable as a unilateral and bilateral relief, whichever relevant. That means you have to pay the difference of 5% in Malaysia. This is with effect from 1st July 2022. During this transition period of 1st January 2022 until 30th June 2022, foreign source income will still be taxable but at a 3% gross level. 15. Real Property Gains Tax, in short, RPGT. At present, RPGT exemptions for 3 residential properties is still applicable until 31st December 2021. Now, to further push the secondary market and to enable Malaysians to buy their first property, RPGT for real properties disposed in the 6th year will be exempted, beginning 1st January 2022. Do take note that this exemption is only applicable to individual under Part 1 Schedule 5 of the RPGT Act. 16. At present, professional sportsmen or sportswomen participate in any sports tournament and won prize money will be exempted from tax. It is proposed that cash winning prize for e-sport received by an individual will also be exempted from tax. So, parents, still complaining about how your children spend hundreds or even thousands of hours on gaming? Think again. 17. To push Malaysia towards a greener country and encourage Malaysians to buy electric vehicles, a new tax relief up to 2,500 ringgit was introduced on expenses related to cost of installation, rental, purchase, including hire purchase or subscription fee for electric vehicle charging facility or equipment.
Hi everyone, I'm Annie from ANC Group. Now, let's see what are the updates on sales tax that have been announced in Budget 2022. First, let us talk about electric vehicles. To support the development of local electric vehicle industry and to encourage domestic demand, sales tax exemption will be exempted on imported, completely built-out electric vehicle. Number 2. 100% sales tax exemption for completely knocked down cars and also 50% sales tax exemption on new and used imported complete built-out car will be extended until 30th June 2022. Lastly, at present, those low-value goods that are not exceeding 500 ringgit from abroad are exempted from sales tax. However, such exemption shall be revoked with effect from 1st January 2023. Thank you.
Hi, I'm Jocelyn from ANC Group. Let's have some updates on service tax. Many e-commerce platforms are offering their good delivery services. Such delivery services will subject to service tax with effect from 1st of July 2022. Next, it is proposed that providers and recipients of brokerage services relating to listed company shares are exempted from charging and paying service tax. Let me update you in regards to excise duty. Effective 1st of January 2022, excise duty will be expanded to include liquid or gel containing nicotine for electronic cigarettes and vapes. It will be imposed at RM1.20 per milliliter. Next, effective 1st of January 2022, excise duty for non-nicotine liquid or gel will be increased from 40 cents per milliliter to RM1.20 per milliliter. Lastly, excise duty on sugar-sweetened beverage will be expanded from 1st of April 2022 to include pre-mixed beverage such as 2-in-1 or 3-in-1 pre-mixed beverage.
Vanakkam, I'm Gayatri from ANC Group. Today I will be giving you the budget updates on corporate tax. As you are aware, for personal tax, foreign income is now taxable when the foreign income is received from outside of Malaysia. This would also apply to companies too, when companies repatriate income from outside Malaysia. Therefore, if income is repatriated during the transition period, which is between 1 January 2022 to 30th June of 2022, the tax rate will be 3% at gross. Since it is taxed at gross, any expenses incurred in relation to the foreign income will not be allowed a deduction. After the transition period is over, from 1st July 2022 to 31st of December 2022, the tax rate will be at prevailing corporate taxes. To next update for the budget 2022 is Cukai Makmur or Prosperity Tax. The Prosperity Tax is imposed on companies that have generated high income during the COVID-19 period, effective year of assessment 2022. Chargeable income above RM100 million will be taxed at 33%, while a 24% tax rate applies to chargeable incomes of up to 100 million. Malaysia's tax regime doesn't have a concept of group taxation. Maybe companies might need to perform some tax planning on breaking up operations into multiple subsidiaries. Perhaps to reduce the taxable income, companies may consider incurring renovation and refurbishment costs to your business premises, because a special deduction of up to 300,000 will be allowed, and this special deduction has been extended until 31st December 2022 in the recent budget announcement. Moving on to next one, Budget 2020 also extended the tax losses that corporations can carry forward. Unabsorbed business losses can now be carried forward for another 3 consecutive years of assessment, in addition up to the 7 years of assessment. So, for business losses incurred in the year of assessment 2018, the unabsorbed business losses can be carried forward until the year of assessment 2028. Any unabsorbed losses from year of assessment 2018 will be disregarded in the year of assessment 2029. For business losses incurred for the year of assessment 2019, the unabsorbed losses can be carried forward until the year of assessment 2029. Any unabsorbed losses from the year of assessment 2019 will be disregarded in the year of assessment 2030. The special tax deduction for individuals owning properties that offer a rental deduction of at least 30% from the original rental rate will be entitled to a special tax deduction equivalent to the amount of rental deduction. This special deduction is also applicable for companies owning properties and generating rental income. But bear in mind that the property must be used up by the tenant for business purposes only. This special deduction is applicable for rental received until June 2022. Thank you.
Hi, I'm Mr. Wang here, the co-founder of ANC Group and the director overseeing the transfer pricing department. I'm here today to give you further updates on the budget 2022. To stimulate the Malaysian economy and businesses, especially the SMEs in the tourism industry, to cope with the impact of the COVID-19 pandemic, the budget introduced several concessions. The first will be businesses are allowed to defer their monthly income tax installment payment due between the period from 1st January 2022 to 30th June 2022, which is a 6-month deferment of income tax installment payments. Another concession is a RM20,000 tax rebate for 3 years of assessment will be given to newly established SMEs, and this tax rebate will be extended to the year 2022. To enjoy this tax rebate, SME must operate no later than 31st December 2022. To encourage businesses within the manufacturing or manufacturing-related services to comply with the SOP under the National Recovery Plan, a further tax deduction of up to RM50,000 is provided to businesses. This further deduction is extended until 31st December 2022. To encourage and support the recovery of domestic tourism sector, the tourism tax exemption is extended to another year until the end of the year 2022. Also, excursion bus operators which procure newly locally assembled buses will be eligible to claim accelerated capital allowances at a rate of 20% as initial allowance and 40% as annual allowance. Theme parks, stage performances, sports events, and cinemas in the Federal Territory of Kuala Lumpur will enjoy entertainment duty exemption on admission fees from 1st January 2022 to 31st December 2022. For arts, cultural, sports, and recreational events approved by the Ministry of Tourism, Arts and Culture, or international sports and recreational competition approved by the Ministry of Youth and Sport, a 50% tax exemption is provided. This incentive is further extended until the year 2025. It is proposed that an increased tax deduction be provided to employers for costs associated with the self-funded booster vaccination. However, no specific commencement date has been provided. Lastly, all businesses will be permitted to revise their income tax estimate in the 11th month of the basis period until 31st October 2022. With effect from 1st January 2022, research and development companies or contract research and development companies must apply in writing to the Ministry of International Trade and Industry to be certified as research and development companies. The Ministry may impose any precondition to the application, and research and development status will be given for 5 years and may be extended upon approval by the Ministry. Research and development companies or contract research and development companies will be given a grace period between 1st January 2022 to 30th June 2022 to apply to the Ministry of International Trade and Industry. So now I'm going to discuss what are the tax incentives that was proposed during the Budget 2022. In terms of tax incentive proposed during the Budget 2022, being a car enthusiast myself, I'm especially looking forward to the incentive provided for electric vehicles industry. During the budget, it was proposed that the EVs, passengers vehicle, commercial vehicle, and electric motorcycle be exempted from import duty, excise duty, and road tax, in addition to the RM 2,500 personal income tax relief as mentioned earlier. To make Malaysia more competitive in attracting long-term capital investment into developing or upgrading digital infrastructure, as well as attracting players in the digital ecosystem, favorable income tax rates will be given to digital technologies provider, where a 0% to 10% corporate income tax rate for up to 10 years for new companies or 10% for up to 10 years for existing company. In terms of digital infrastructure providers, investment tax allowance are provided up to 100% on qualifying capital expenditure and for up to 10 years, which can be set off against up to 100% of statutory income. To enjoy this new tax incentive, an application will need to be made to the Malaysian Investment Development Authority or MIDA from 30th October 2021 to 31st December 2025. Company that sponsors scholarships to Malaysian students for the year of assessment 2022 to 2025 are entitled to double tax deduction. The incentive will be reviewed to include all fields of study at the technical and vocational, diploma, degree, including masters and doctorate. To enjoy this incentive, the criteria are: students will need to be Malaysian citizens, student must complete the approved internship program before the end of the final semester, a minimum internship period of at least 10 weeks, and finally, monthly allowance of at least RM 500 for each student. Companies that implement a structured internship program approved by the Talent Corporation Malaysia Berhad will also get to enjoy this double deduction on qualifying expenditure. Next, introduced during the Budget 2014, the Vendor Development Program. It was introduced to develop local vendors among micro, small and medium enterprises. anchor companies that develop local vendors under the VDP and sign the Memorandum of Understanding with the Ministry of International Trade and Industry and the Ministry of Entrepreneur Development and Cooperatives were given double tax deduction on operating expenses, such as the first one, cost of development, R&D and innovation. The second one, cost of improvement on vendor company capabilities, such as ISO certification. And number three, cost of vendor skill training, capacity building, lean management system, and financial management system. During the budget 2022, the eligibility for the VDP double deduction has been enhanced, where the deduction for qualifying expenditure has been increased from RM 300,000 to RM 500,000. The incentive was also extended for 5 years for anchor companies that have signed MOU between 1st January 2021 to 31st December 2025 with the Ministry of Entrepreneur Development and Cooperatives, and deduction are given for 3 consecutive years of assessment. During the budget 2020, the tax incentive was provided for green technology under the Green Investment Tax Allowance, also known as GITA, and Green Investment Tax Exemption, also known as GITE. The scope of the purchase of qualifying green assets and green services has been expanded to include rainwater harvesting system. Next, for companies that have exhausted their claim for reinvestment allowance and special reinvestment allowance under the Penjana, additional reinvestment allowance of 3 years is proposed during the budget 2022, where companies can now claim reinvestment allowance again for another 2 years to year of assessment 2024. This proposal is to continue the national recovery agenda due to the pandemic. Do note that reinvestment allowance under Penjana, which has not been utilized before the year of assessment 2024, can only be brought forward for 7 consecutive year of assessment, beginning from year of assessment 2025. Any unabsorbed reinvestment allowance after 7 years will be disregarded. To assist social enterprise in raising funds that create positive social and environmental impact, it is proposed that tax exemption be given on all income for up to 3 years of assessment, subject to the validity period of social enterprise accreditation. Application for the exemption will need to be submitted to the Ministry of Finance or Yayasan Hasanah from 1st January 2022 to 31st December 2023. So I'm going to give you now the budget update in terms of stamp duty. For those who trade shares, this budget proposal may impact you. As you are aware, currently, contract notes relating to sale of shares, which are listed and quoted on Bursa Malaysia, is subject to stamp duty at 0.1% of the transaction value. This is calculated as RM1 for every RM1000 or fractional part of RM1000, subject to a cap of RM200. It is proposed in Budget 2022 that the stamp duty rate on contract notes relating to the sale of listed shares be increased to 0.15%, which is calculated as RM $1.50 for every RM1000. In addition, the total stamp duty cap of RM200 is to be removed. For merger and acquisition, stamp duty exemption is given to qualifying instrument executed for M&A of micro, small and enterprises approved by MEDAC from 1st July 2020 to 30th June 2021. It is proposed in Budget 2022 that the stamp duty exemption on M&A related to instruments is to be extended for another 1 year. Effective for application in respect of M&A of micro, small and medium enterprises received by the Ministry of Entrepreneur, Development and Cooperation from 1st July 2021 to 30th June 2022, and M&A related instruments executed not later than 31st December 2022. It is proposed that 100% stamp duty exemption be given on loan or financing agreements executed between micro, small and medium enterprises and investors for funds raised on P2P platforms registered and recognized by the Security Commission Malaysia. Effective for instrument executed from 1st January 2022 to 31st December 2026. It is proposed that the exemption be extended for another 1 year. Currently, stamp duty exemption is given for the purchase of insurance policy or takaful certificates for pelindungan tenang products with an annual premium or takaful contribution not exceeding RM100 issued from 1st January 2019 to 31st December 2025. It is proposed that the value of annual premium or takaful contribution for the insurance policy or takaful certificates for pelindungan tenang products to be increased from RM100 to RM150. Stamp duty exemption is given to individuals and micro, small and medium enterprises for the purchase of insurance policy or takaful certificates with an annual premium contribution or contribution value not exceeding RM150 for individuals and RM250 for micro, small and medium enterprises. Looks like we have come to the conclusion of our budget 2022 updates. I hope that you can actually gain certain information from our video and it will help you plan ahead for your taxes in year 2022. But if you have any questions, or you have any doubts in terms of what was explained in the video, feel free to reach out to us and we'll try our very best to help you out. Thank you.